Hi, I'm Danni Hewson, Head of Financial Analysis at AJ Bell, and I'm joined by James Flintoft, Head of Investment Solutions at AJ Bell. And we are going to discuss the performance of AJ Bell funds over the first quarter of 2025, look back at some of the volatility and discuss what might happen over the rest of 2025. James, thanks so much for joining us. It's been quite a quarter. What have been the main talking points?
Yeah, you're right. A lot going on, particularly in the US, of course, with the new Trump administration coming in. Lots of policy making happening day to day. Lots of new announcements, particularly regarding trade deals and tariffs, etc. But funnily enough, there have been other things going on in markets, particularly when you go across to China. The emergence of some AI competitors over there to challenge the US dominance has been a big factor. And then in Europe, there's been an about turn in Germany, which was really unexpected, with fiscal spending now coming on the agenda suddenly after the elections, just something that was very much unthinkable just a couple of months ago.
How have equity markets performed or responded to some of these changes?
Well, I suppose take the positives first. China has been very strong with that emergence of AI technology lifting a couple of stocks in Hong Kong particularly well. On the negative side of that, is challenge in the US has been that some of those Magnificent Seven names have fallen by the wayside. And then in other regions, as I said, that fiscal spending in Germany is really centered around infrastructure and defense spending. So that's been positive for certain sectors in Europe and lifted European equities more broadly as well, because it's expected that a lot of that spending will take place within the EU. And then in the UK, that's had another good quarter as well, lifted by banks in particular. Some of the, I suppose, unfashionable sectors, when you think about it, have come to the fore in a quarter when the US and the tech names have fallen by the wayside.
What about bond markets? Because they've been interesting.
Yeah, really interesting. They started the year off thinking about inflation primarily as a driver there, but as the quarter wore on, actually we got some data suggesting that US economic conditions were weakening, perhaps related to the announcements coming out of the new administration, the uncertainty that that's created for businesses, really impacting sentiment there. So that weakness in growth, or potential weakness for growth this year, has really impacted bond markets later in the quarter and seen yields decline and returns being quite reasonable for overseas government bond markets.
So the big question, how have AJ Bell funds performed?
Yeah, the funds, it's been a more challenging quarter for markets in general. We're relatively pleased with how the funds have performed in that sort of environment, because we are diversified. We're not reliant on those returns coming from the particular names in the US. But that's been good to see, but obviously a more challenging period for markets. The income funds have done relatively well because they are biased away from some of those tech names as well, and particularly in the UK, our exposure to the FTSE 100 has been really positive for those funds. On the flip side, the responsible funds had a tricky quarter because of some of its bias away from energy names in the UK, for example.
So you made some changes to the portfolio in January. How's that played out?
Yeah, the main one that's played out quite nicely has been Europe. We rotated into European equities because we thought they looked cheap on valuation grounds. That started to play out much quicker than we expected, but that's been very good for the portfolios. Aside from that, some of our position in bond markets has been good and bad. So we've been focused on the inflation scenario there. So early in the quarter, that was good for us. As things wore on, some of our lower sensitivity to interest rate moves has been a bit of a hindrance, but not too much of a hindrance that it's made a significant impact on returns.
James, thank you so much for talking to us. We look forward to catching up with you and the rest of the team throughout the year.
Thanks, Danni.